We out here. It's Mike, pro house seller, man. Welcome back to the channel, man. You already know business is always booming, man. Business is always booming. But I'm out here, man. It's nice out. It's like 6 in the afternoon or something like that. The sun is setting, so it's nice. Go out for a walk, man. And I wanna talk with y'all a little bit about debt and taxes, man, because we all know, you go ask the average person, everybody knows the rich people are super rich. And if y'all watch my videos, y'all know I'm always talking about the wealth gap getting wider and wider and whatnot, man. So I'm trying to help that get a little shorter if I can, man. So I want to talk about debt and taxes. So we all know the rich are super rich. They got all this money and they barely pay any taxes, or, they barely pay any taxes and whatnot, income taxes and whatnot. Now, when you tell that or ask that to the average person, they're going to be furious. They're going to say, what the hell? Why are they not paying any money in taxes? They should be paying money in taxes. Well, what's up with that? So I want to talk about that, because most people, they know that the rich pay little to no money in taxes, but they don't know why. When you say, why is that? It's like malfunction. The simulation did not get that far, and they don't know. And then they just go back and resort to the same arguments, the same regurgitated arguments that they saw somebody else say on Twitter. So I want to give you the truth. This is how rich people don't pay taxes. So when rich people, if you watch my 50 Cent video, you'll see that I talked about how rich people, they don't work for money. They work for the asset. If you read Rich Dad, Poor Dad, you'll know that as well. You'll know that the rich don't work for money. They work for assets. And this is why they work for assets, because when they work for the assets, so somebody like Bill Gates, and it doesn't matter, any rich person, any billionaire, Bill Gates, Donald Trump, Elon Musk, insert them there. It all applies. They all do the same shit. So they'll build their asset. So when Elon Musk was building Tesla and not taking his salary, he didn't want to use that money because he wanted to use that, or he didn't want to use that money on himself. He wanted to use that money to build Tesla. And the reason he did that was now he built Tesla so huge. Tesla, at least, I don't know what it's worth right now, $500 million or $500 billion, something like that, maybe a little more, a little less, depending on when you watch this video. But Tesla is worth so much money now, and Elon Musk owns a piece of that. You see, when he works for the asset, he's working to build his position in Tesla. So now he built it so much, that position is worth $200+ billion. So now this is what he does. Now he's worth $200 billion. You see, when people hear net worth, they think that's how much money you got in the bank. No. Just because you don't have that money in the bank until you sell the stocks. Just like you and me can go on Robinhood and buy a stock, Elon Musk has Tesla stock too. He just has hundreds of millions of those options, while most of us just have maybe a few, maybe 10, if you got it like that. You know what I mean? So that's the difference. So now here's what Elon Musk does, because when you and me want to get money, we're going to sell those Tesla shares and then have to pay capital gains tax on it. See, Elon Musk and the rich, they understand that. They don't want to sell their stock, and they don't want to sell a piece of their company that they worked and put blood, sweat, and tears for. They don't want to sell off. They don't want to live the good life that much to sell off their entire company, because they don't work for money. They work for assets. So obviously that's out the question. They can't do that. They're going to sell off a piece of their company and then pay a huge tax bill on top of it. So this is what they do. So when they build up their company, now they're worth $1 billion, $2 billion, $10 billion, $100 billion, whatever they're worth. They don't have that money in the bank account. That's just what the numbers say on a brokerage account. Remember now, net worth does not mean that's how much cash you have in the bank. That's just how much your assets are worth on a piece of paper. So now when they have that asset sheet on a piece of paper, they go into a bank. Wells Fargo, JP Morgan, doesn't matter. Goldman Sachs, doesn't matter. They go into the bank and he says, "Hi, Goldman banker. My name is Jeff Bezos. My name is Elon Musk. My name is Warren Buffett." It doesn't matter. I'm the CEO of this multinational trillion-dollar company. I have stock options in this company worth hundreds of billions of dollars. Can you give me a loan for $10 billion, $5 billion? And the bank, yes, deadass, they go in there, they ask for a personal loan of that magnitude, and the banks give it to them. Just like how you and me, I'm a realtor. So when you want to buy a house, it's no different. It's no different from going into the bank and asking for a mortgage. They look at your credit history, your FICO score. They look at your job history, how much you get paid. They look at all those factors to see if you're a credit-worthy borrower. For people like Jeff Bezos, Bill Gates, people like that, billionaires, it's just on a higher scale that most of us will never see. They go in there for the same thing. They go in and apply for a personal mortgage. They're not using this mortgage for their house. Now, this is the money that they use to buy their toys and expensive toys. But here's the thing. They don't have to pay tax on that money because it's a loan. They got a loan. You don't pay taxes on a loan. When you get a loan, you owe that money back. So now, let's say that Jeff Bezos, now Jeff Bezos is in the bank and they give him the 5 billion. They give him 10 billion at a 1.5% interest. That's a big enough, even though, 1% of 10 billion, that's a good payout. So the bank is going to be making good money off of that. Jeff Bezos is worth that much, and his company, now here's what they do. They let their company pay for that bill. They let their company pay for those interest payments. And the banks will probably never have a margin call on them because why would you do that? They can afford that loan. Then you and me can go and do the same thing. They're going to kick us the hell out like Uncle Phil's kicking out Jazz because we don't got it like that. They got it like that. That's why they work for the asset. And then they go into the bank. Now they don't have to sell the asset, so they don't have to pay taxes on, because you don't pay taxes on stocks until you sell it. And now they don't have to pay more taxes because now they got a loan. Now they got a line of credit. The government's not going to tax you on a loan. That's not how taxes work. And then on top of that, while you're making the interest payments, you get a tax break on that. That's how so now you're making money off of that loan because now your business is paying for that. As long as your business is able to pay for those interest payments and pay down the principal and whatnot, you're good. And then as you become more and more richer, if they want to refinance it, they can do that for a lower interest. It's the same thing as buying a house. That's how Elon Musk bought Twitter. Elon Musk didn't just pull out $40 billion out of his bank account and say, I want to buy Twitter. No, he went to Morgan Stanley and he says, hey, Morgan Stanley, I want to buy Twitter. It costs $40 billion. Can you give me the money? And they look at his Tesla shares and say, yep, you got to put your Tesla, you got to mortgage your Tesla shares. And he says, yeah, okay, I'll mortgage my Tesla shares. Just like people mortgage their house. If I can't pay, you take my house. You foreclose on my house. That's what the billionaires do. If I can't pay this, you foreclose on my stocks. It's the same thing. So they never pay taxes because they build the equity in their company and they leverage that equity with debt. So rich people, in reality, if you really want to look at it, they're in debt to their eyeballs. They have the most debt, more than anybody. They have more debt than anybody. That's why they don't pay as much taxes. Now, people could say that's bad. That's not fair. Why don't? First of all, I mean, you could say it's not fair. One, somebody will say life's not fair. But two, you could do that too. It's the tax code. They're not breaking any laws. If they broke any laws, they would end up like Jeffrey Skilling and Ken Lay, the CEO and founder of Enron, who tried to, rob Wall Street. Ken Lay is dead now, probably from the stress. And Jeffrey Skilling just got released from jail a couple years ago. And this happened in the early 2000s. So what these people are doing is not illegal. What the Enron guys did was illegal. What the people like Bezos are doing is completely legal. You could do it just like them. We just got to understand the system and learn it. Rich people use debt and taxes. They use debt so they can get rich. That's all. That's all. You could do it. I could do it. We all could do it. We got to learn the system. They got the best accountants in the world that understand that. Now, maybe we don't have access to that, but shit, Google is free. So that's what it is. That's what it is. The rich build their equity stake in their companies and leverage that, mortgage that to get a loan. That's tax-free. Real estate investors, it's the same thing. They buy investment properties and they add value. Maybe they buy a piece of shit house, fix it up. Then they go to the bank and say, hey, bank, I'm getting X amount of rent now. This property, we put this into it, we put this into it, we put this into it. How much can you give us? Okay, we'll give you this. Maybe you bought it for $5 million, you put $7 million into it, now it's worth $20 million. Now, you know what I mean? Now you just got that $8 million equity. Now you pull that equity out. It's a loan, you refinanced it. Now you got a new mortgage, now you got that cash free. Now, and then what they do, they go do it again. They go buy more properties or they have fun with that. It's the same thing. It's done in every industry. That's how they pay minimal taxes. That's how they pay minimal taxes. But when you work for cash or you have an asset and you sell it, that's when you become taxed. So the billionaire will do that for decades. They'll build their company, get a loan on it, refinance. Build their company, build another company, refinance. Build a company, refinance. So now they're living lavish, having their net worth skyrocket, but they don't pay any taxes because their debt also skyrockets. But then when they die, there's this thing called the stepped up basis. Because when you do all those tax deferments, they're just deferments. They're not avoidance, they're just tax deferments. So you just have to pay it in the future, like a 1031 exchange, all that stuff. So they're just pushing it out for the future. But when you push it out and push it out and push it out, now you're dead. Now you pass the assets on to your heirs. There's this thing called the stepped up basis, where the government won't tax your heirs on that. Because let's say, for example, so let me give you an example so this makes more sense. So let's say I own a house, right? I'm 23. Let's say I buy a house and it's at 200K. I'm 65 years old. Now the house is worth $1 million. You know what I mean? And I die. And my kid gets it now and they want to sell it. The county's not going to tax my kid on the 200 or the $800,000 of capital gain that I made over the duration of my life. They're not going to tax that to my kid. They're going to step it up and they're going to tax it from $1 million to whatever my kid sells it for. So that's significantly less tax bill. And estate attorneys and CPAs can go way deeper into this. I'm none of that. So I'm not trying to sit here and act like I know all that, but this is just what they do. This is what they do. And it's all a game. It's all legal. It's all legal. They mortgage their assets, leverage them, and when they die, they pass it on to their heirs, and their heirs don't have to get that tax benefit because the government only taxes the heirs from when they got it, not from when their parents had it. So that's how it goes, man. Just out here on a quick rant. Appreciate y'all. I'm back home now. About to walk back into the crib, man. But just want to give y'all this quick video so more and more people understand what's going on, man. I'm posting on this channel all the time, man. I'm always gonna let y'all know what's going on to the economy, man. So like, comment, subscribe, and most importantly, man, share this with everybody else, man. Let's all get financially educated, man. You already know business is always booming, man.